Today we're going to talk about credit rescoring.
Woo!
All right. I'm here today with Barb Quinlan with Bank of England. Barb, can you tell us a little bit about credit rescoring in the purchase of a home?
Sure. So what credit rescoring is basically when we initially pull your credit for a pre-approval, I'm going to do a credit rescoring, which basically means we're going to re-pull a report that basically will tell me what things the client can do to improve their credit scores during the process and hopefully get a better rate, less closing costs, and qualify for a better program.
Right.
Mm-hmm.
So what are the things they can do? Say you pull up, give me a typical situation that might happen, maybe something happened recently with one of your clients.
Sure. So I just had a client recently that I pulled credit on, and I did a rescoring on that client and found out that his credit scores could improve actually 35 points.
Wow.
By simply paying down a credit card $350 and leaving a balance of $44 on the account.
So they didn't pay it off completely, they just paid it down.
Correct, and that's really important. Most clients feel I want to pay off my debt before I purchase a home, and that's not always the best case scenario. Credit scores are based off of credit history, so if you pay something off, you're not having a history of that account.
Correct.
So most times that will actually be a negative thing on somebody's credit.
So basically what you're telling me is they went in there with a credit score of say 620 or something,
Mm-hmm.
and before it closed they raised their credit score.
Correct, 35 points.
35 points, and therefore giving them a better deal on their loan and so on and so forth.
Correct. So we can go down to a 580 credit score going FHA, but anytime you are below 640 on a credit score for FHA, there are pricing adjustments, which means a higher rate or means higher closing costs. So with this client, as an example, it ended up saving him about $3,500 in closing costs.
Okay.
To keep the better rate, just simply by paying down his credit card a couple $100.
So what are some other things that you're seeing out there in the marketplace that people do that say sometimes hurt their credit?
Mm-hmm.
Or they think they're helping their credit, but really they're hurting themselves.
Yeah. So sometimes during the process, a collection might come up on your credit report that maybe was just recently reported. You know, initially you're going to think, I'm going to pay that off because that's the smartest thing. Well, it really depends on when that collection was reported on your credit report. If it's brand new, meaning in the last 12 months, yeah, most times I'm going to recommend you to pay it off.
Okay.
But if it's longer than 12 months, it's not necessarily affecting your credit anymore. And so what happens is when a client pays off an account that's longer or been on the credit report longer than 12 months, it looks like it's a brand new account. So even though they're paying in full, it looks like it's a fresh new collection, which obviously is going to definitely hurt their credit report.
Wow.
Mm-hmm.
Interesting. So what out in the marketplace, what are you seeing? Do you see more FHA loans? Do you see more conventional? What are you seeing now?
Most of my buyers, it's kind of a good mix of the two. FHA is a great product for 3.5% down, but FHA has quite a few drawbacks. That mortgage insurance premium, that's
Right.
a cost. It's 1.75%, and it's financed into the loan. So a lot of clients don't really think it's a fee because they're not actually bringing that money. But
Right.
at the same time, that's eating up their equity in their property.
Sure.
So FHA is a great product for that purpose of having just 3.5% down, but quite honestly, I use a lot of conventional 3% down.
Okay.
So it's lower percentage down, and it's no mortgage insurance premium.
Right.
So they save quite a few thousands of dollars in a fee because of that, going conventional.
So one of the things that I know I've talked to you before about this, but one of the things you do is you score and then you rescore.
Mm-hmm.
And then you also go more thorough in scoring them initially to check for judgments and check for other things, or what do you look for?
Yeah, so every company has a different pre-approval process. The way I do a pre-approval is I will pull credit and I will ask for documentation like pay stubs and W-2s and tax returns. I want to see the whole picture, just like an underwriter would,
Right.
so that we can go through that transaction knowing that we're ironclad, nothing's going to fall apart, we're
Right.
going to get to closing.
Right.
Many lenders will just issue a pre-approval letter just based simply on pulling credit,
Right.
and that is not a pre-approval. Credit reports used to actually show judgment. So if a client had a judgment on their credit report, it would show. Well, that doesn't happen anymore. So you actually have to go a step further and pull a judgment search for a client.
Right.
So when a client comes to me for a pre-approval, I do that extra step. I will look at rescoring opportunities to try to help the client save money or qualify for a better program or qualify for a better rate. And at the same time, I will have an ironclad pre-approval by doing a judgment search, by looking at the W-2s and the pay stubs and the tax returns, so that during the process, they're not at all concerned about their approval for their mortgage.
And that way, that client then, they know that they can go follow through with the purchase of the home, because the last thing they want to do is get money out of pocket.
Right.
And at this point, they're going to have a substantial amount of money.
Right.
And then they're tying up a seller's property, if we look at it that way, and they're going to be emotionally invested in the property. I mean, I always say that people become mentally into the property before they even close on the property, you know, and we don't want that to happen.
Right. It's the biggest decision of your life, purchasing a home that you might stay in 3 years, 5 years, 30 years. You don't know. So it's so important to work with a realtor like Ray that will walk you through the
Realtor
steps.
Ray!
Realtor Ray! And somebody like myself, I've been doing mortgages for 20 years. I'll attend the closing. I'm with you through the process, and we communicate throughout the process so you're nice and comfortable during it.
That's right. I've always had a really smooth deal with Barb, I will tell you that.
Thank you.
So anyways, how can someone reach you, Barb?
Yeah, they can call my cell phone. That's probably the easiest thing. Call, text. Cell phone number is 219-501-2714. I have an office here in New Lenox, and then I have offices in Indiana as well, and I can write loans in all 50 states.
Thanks for being on the show.
My pleasure.
And, you've
Thanks for
given
having
us
me.
just a plethora of information today.
Happy to do it.
All right. We'll see you.
Thank you. Bye.
Bye-bye.